Welcome to weekly view on markets. Nifty gained further 1.66% during this week. All indices gained due to broad-based buying in all sectors. Cooling of crude prices and also inflation is a good news for the markets. Quarter one GDP growth figures have come, and GDP growth is slightly lower than the estimates. Lower growth rate and lower inflation strengthens the call for demand for a rate cut by RBI. Markets may go higher on the expectation of the rate cut. Charts indicate further upside in the market in the coming week. Investors should remain invested. They should not book profit early. New investors should invest regularly. They should invest through SIPs and they should not look at the market levels. Regular investing habits will create a long term wealth for new investors and young investors. Now let us look at the level of different indices. Nifty closed at 25,235 with a gain of 412 points, 1.66. Bank Nifty closed at 51,351 with a gain of 417 points, that is 0.82%. Mid cap indices closed at 59,286 with a gain of 1.25%, that is 731 points. Small cap index gained 1.19%, that is 228 points, and closed at 19,307. India Weeks is steady at around 13.39. Now let us look at different sectors. Almost all the sectors have closed in the green, except PSU Bank and FMCG, which were slightly negative. Information technology gained the most. Why? Because the GDP growth in US is picking up, inflation is coming down, and there is a rate cut, interest rate cut expected in US. This all is good for the IT sectors which have heavy uh, operations in US. That is why we see a big rally in IT sector. Realty sector has gained 3.47%. Pharma sector gained 3.06%. Healthcare sector gained about 2.88%. Oil and gas gained more than 2%. NBFCs, media, infrastructure, auto sector, metals all gained between 1 to 2%. Energy and consumer durables gained about 0.9%. So there was all around buying. The market is in a very good health. A lot of interest is there by institutional investors and also by individual investors. So this is quite good for the market, and investors should remain invested. Now let us look at the technical charts. This is the daily chart of Nifty. I have written the trend line which I had drawn in the earlier week, and I had told as long as Nifty remains above this trend line, that is, Nifty remains above 25,000, we have a positive view on Nifty index, and it is likely to scale to the higher levels. This is the chart of Nifty mid cap index. As long as Nifty mid cap index stays above 57,800 level, which is a crucial support level, uh, I have a positive view on mid cap index. This is a chart of Nifty small cap index. As long as small cap index remains above this trend line, that is a level of around 18,800. I have a positive view. Technically, it looks quite strong. It is making higher tops, higher bottoms, and any dip while making higher tops, higher bottom, it will make bottoms. So those bottoms are good buying opportunity in the small cap index. Comparing to all the three indices, last quarter results were very strong in the small cap sector. So investors should look at picking up good quality small cap stocks during the small corrections that they come in during the. So this is a buy on dip market. This is the chart of Bank Nifty index. Now Bank Nifty index has come in, around the resistance level, and you can see this red candle on Friday. That means at higher levels there is profit booking. So traders in Bank Nifty index needs to be careful at around these levels. From here, if it gives a positive move, then the Bank Nifty can go to 52,000 levels. So investors needs to be careful as it is around the resistance level at present. Now let us look at macroeconomic fundamentals of the market. Macroeconomic fundamentals of Indian economy continues to remain strong. Forex reserves is at a record high of 681.88 billion US dollars. It is up by 5.58 billion US dollars during this week. Foreign exchange rate is at 83.86 per dollar, and dollar index is at 100.73. So there is globally the demand for dollars is cooling off from about 105. The dollar index has come to around 100 level now. Brent crude price is remaining below $80 per barrel. It is at 76.29. So this is good for the Indian economy. Gold price is at 71,651. It is quite steady for last few weeks. FIIs, they were net sellers for past several weeks, but this week they have turned into buying. They have bought 9,217 crore for the week. DII is also continues to buy. They have bought 1,198 crore in equity during this week. Both FII and DII buying is providing the support for the market. That is why we see Nifty is gaining continuously for more than 10 sessions, for more than 10 trading days continuously. GDP growth figures for first quarter, that is April to June, has come. It is at 6.7%. It is slightly lower than estimates. Why it has come lower is lower growth rate is due to the slow agricultural sector. If we remember, there was a very severe summer during this year, during April and May, and due to that, agricultural sector is slightly affected. And second reason is the reduced capital expenditure by the government. Why this expenditure has come down is due to the elections, general elections. During the election period, is a election code of conduct imposed by the election commission. So, and also all political parties and people are busy with electioneering and election duties. Because of all these things, the GDP figure has come slightly lower. But the full year GDP estimate is retained at 7.2%. Is expected to pick up in the coming quarters. Industrial sectors, travel, tourism, and other core sectors are doing well. So because of this, the GDP estimate for the full year has been retained. So most of the sectors are doing well, and with a good monsoon, agricultural sector is expected to pick up in the coming quarter. Lower inflation and slow growth will prompt RBI to cut the interest rate. Markets are quite happy with this kind of situation. Lower interest rates will help the companies to boost their bottom lines, and it will also result in higher GDP growth. Why markets are happy. Markets may go higher due to this expectation of rate cut. Indian economy is doing quite well. It is going from strength to strength. Economic fundamentals continues to remain strong. So any dip in the market should be bought by the investors. Investors are advised to remain invested, and new investors should take SIP route for investing. They should invest regularly. Regular investing habit will create good long-term wealth for new and young investors. This is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends. You can ask your questions. We will meet again next week. Thank you.